Now we will go for question number 2. We have completed 1. This is going to be in page number 104. So here you are going to see from the following details, you are required to prepare statement of profit and loss for the year ended 31/3/2018 as per Schedule 3 of Companies Act of 2013. Remember, whenever you are preparing statement of profit and loss, it is as per Schedule 3 only. And we have many items here. We have to check, is it belong to income statement or not? For example, you're starting with plant and machinery. It is an asset. It goes to balance sheet. Furniture is an asset, fixed asset. Goes to balance sheet. Share capital, 4 lakhs. It goes to balance sheet. So this is very important for you to understand. So if it is connected to balance sheet, please don't enter in the statement of profit and loss. Take only the amounts, items belong to statement of profit or loss. Ignore the other items. So first 3 items we are ignoring. We are getting into the sales. Sales is 3 lakhs. Sales is nothing but revenue from operations, 3 lakhs. So only one amount. Revenue from operation also same. And operations are nothing but production and sales, buying and selling. That's the same thing. That is how it is, sales only. Next, purchases. 1,80,000.
Sir, can you repeat? Excuse me, sir.
Yeah. Sales.
Can you repeat why we left the first 3?
It is connected to balance sheet, fixed assets. It is not an expense, it is not an income. These items belong to balance sheet. So it won't come under statement of profit and loss. So when we prepare balance sheet, we take.
Okay, sir.
We are not preparing balance sheet now, so we ignore it. Next, purchases, 1,80,000. Purchases of goods, 1,80,000. We don't have purchase returns. If purchase returns is there, we have to deduct it. Next, trade payable. Trade payable is nothing but creditors. Creditors is a liability. Even this item comes in the balance sheet.
Balance sheet.
We are not taking in statement of profit and loss. We are ignoring it. Next, depreciation on plant and machinery we have, and amortization of goodwill we have. Depreciation and amortization almost similar. Depreciation is calculated on fixed assets, tangible assets. Amortization is calculated on intangible assets. Amortization is reduction in the value of intangible assets. So we have 2 items over here connected to one heading. So we are getting into item like depreciation and amortization. I will take under separate heading. Note number 2. Depreciation on plant and machinery, 4,000. Amortization of goodwill, 6,000. So we have taken depreciation and amortization. Next, we are moving to interest on debentures, 30,000. Interest on borrowings, 20,000. There are 2 interest paid. Remember, they have not told interest received. So that means both are interest paid only. Borrowings means loan, interest on loans. Interest on debenture is a loan taken from general public. So company has to pay to the public. So interest on debenture is also paid. So for that, we are going to have an expense called here finance cost, interest on debentures 30,000, it is interest paid. Interest on borrowings 20,000. So we have done with it. We have only the tax as an income tax of the company, 30% given. So that we will take it later. So we have completed all the transfer entries. Total is 50,000 for finance, 10,000 for depreciation. So I will take this 50,000. Finance cost, I will enter here. I have written note 1, note 2, remember. 10,000 for depreciation. So I have taken both of this. Now we don't have any other income. So total revenue or total income is 3 lakhs. We don't have cost of material consumed, changes in inventory, employee expenses, other expenses. So we go for totaling the expenses. 3 amounts are there, 1,80,000, 50,000 and 10,000. That will come to total 2,40,000. So 3 lakhs minus 2,40,000, that will be 60,000. Profit before tax. Profit before tax. Now we have to go for tax calculation. So it is 30%, similar to the previous problem. So this has to be calculated on 60,000. So 60,000 into 30%, 18,000. So 60,000 minus 18, less taxes. Profit after tax 42,000. That is the final answer. You can have a look at it. And I have given a note: plant and machinery, furniture, share capital, and trade payables are to be taken in balance sheet. So it will not come in statement of profit and loss.